Crypto is all about narratives. The tricky part is figuring out which narrative will be the biggest.
Which one? Which one?
Well, it looks like one of them is going to be tokenized real-world assets, or RWAs. And that's because asset managers like BlackRock are launching tokenized RWAs left and right, and are even pressuring the SEC to let them do more, just like they did with the spot Bitcoin ETFs. And that's why today we're going to do a deep dive into the top 5 RWA cryptos. Stay tuned. Before we begin, let's make something clear. Financial advice is not given here. I don't tell you what to buy or trade. Your portfolio is built from the choices you've made. Tokenized art and stocks on chain, RWAs, are changing the game. But this is crypto and the risks can be steep, so DYOR before you take the leap. Hit like and subscribe if you're here to stay, and with that out of the way, let's talk RWAs. Now, let's start with a bit of background. Tokenized RWAs, or real-world assets, are, well, exactly that. They're assets you find in the real world that are digitized and put on a blockchain. And this can include things like real estate, art, intellectual property, gold, stocks, and treasury bonds. When these assets are tokenized on a blockchain, their associated tokens essentially serve as a proof of ownership of the underlying asset. What you may not know, though, is that pretty much every single one of you have used RWAs at some point. And that's because stablecoins are technically RWAs, as they are tokenized versions of real-world currencies like the US dollar. What makes tokenized RWAs exciting is that they provide multiple benefits over their real-world counterparts. Suppose you're selling an apartment building. Finding a buyer for this building could be difficult, as you would either need to find someone who can buy the whole thing or arrange a complex deal consisting of multiple buyers and lots of paperwork. If you tokenize this apartment building, though, it becomes possible to do a bunch of things, like split the apartment building into thousands of shares that can be purchased by investors, with all the ownership rights being tracked by smart contracts instead of lawyers. You could even create a market for these shares and earn a cut of the fees as they're bought and sold by the investors. This is just one example of the many possibilities enabled by tokenized RWAs, and many people in crypto and beyond are very bullish on them. For instance, BlackRock CEO Larry Fink has been obsessed with tokenizing real-world assets, so much so that it's honestly starting to get a bit creepy. In any case, Larry believes that tokenization can streamline financial processes by reducing costs and eliminating TradFi complexities. In fact, Larry says that tokenized RWAs can reshape the way that assets are managed. And when the CEO of the world's largest asset manager is saying that, you'd be crazy not to think that the narrative has potential. So then, this brings us to the first RWA crypto that you need to watch, and that's Chainlink. Now, for those unaware, Chainlink is a decentralized Oracle network that connects smart contracts with real-world data. And this enables secure and reliable interoperability between on-chain and off-chain systems. This is key for asset tokenization, where asset ownership needs to be handled with precision. As such, many RWA projects use Chainlink to ensure data reliability, making Chainlink the leading data driver for the entire RWA narrative. Using our apartment building example from earlier, Chainlink would be able to verify the property's value and could even automate the distribution of any rental income for each apartment. And what's more is that Chainlink's oracles provide complete transparency, and its smart contracts can be triggered based on real-world events. So, if an asset is sold in the real world, the blockchain will automatically be updated. Pretty sweet, right? Anyway, Chainlink has shown resilience in the face of years of crypto's ups and downs, and this has led many crypto projects to only accept stablecoins and other assets that have Chainlink's price feeds. Not only that, but Chainlink has a load of cool features to enhance the way it provides the real-world data. For example, there's Chainlink Functions, which is a serverless Web3 platform that leverages Chainlink's oracles to bring Web2 data on-chain. And this provides additional RWA data, such as the available yields or the ownership records of a particular asset. Chainlink's tech all sounds pretty awesome, but where does its token come in? Well, Link is used to pay for the operation of a wide variety of Oracle services, which is the main demand driver for the token. Link is also used to incentivize node operators to provide accurate data and can also be used for staking. Logically, this means that Link's price is likely to be pushed up as adoption increases and more RWA projects start paying for the data feeds. And this is why some analysts, like those at K33 Research, have labeled Link as the, quote, the safest bet in the RWA narrative. Okay, our second RWA crypto pick is Ondo, which has emerged as a leading RWA platform. Ondo is centered around the creation of tokenized traditional assets that provide a stable income-generating yield. The key to Ondo's success is its transparency and its compliance with TradFi regulations, meaning that investors of all kinds can feel assured that everything is being done above board, so to speak. Ondo's structure is primarily made up of two arms: the asset management arm, which creates and oversees the tokenization of RWAs, and the technology arm, which develops DeFi applications that support the scalability of Ondo's financial offerings. Ondo also offers several products of its own, such as the USDY stablecoin. USDY, which stands for US dollar yield, is essentially a tokenized digital dollar that's secured by short-term US treasuries and bank demand deposits. Another one of Ondo's products is OUSG, which provides tokenized exposure to BlackRock's BUIDL, a short-term treasury fund. Oh, and if you're wondering about Ondo's ties to BlackRock, Etherscan shows that it holds around 38% of BlackRock's BUIDL fund. Crazy stuff. Oh, and just recently, Ondo made two seriously bullish announcements. First, it revealed the next evolution of Ondo Global Markets, or Ondo GM. In a nutshell, Ondo GM is a platform designed to tokenize access to stocks, bonds, and perhaps more importantly, ETFs. The aim is for Ondo GM to make RWA investing much more accessible, transparent, and efficient. Notably, Ondo GM's reimagined framework was inspired by the accessibility and liquidity of stablecoins. Ondo then revealed the Ondo Chain, a purpose-built layer 1 for institutional-grade RWAs. Ondo Chain was designed alongside advisors that include industry leaders like Franklin Templeton, Wellington Management, WisdomTree, and Google Cloud, to name but a few. Ondo says that an all-new RWA-focused blockchain was needed, since existing chains lack the infrastructure needed for true institutional adoption. Although the chain will be open for anyone to participate, Ondo Chain's validators will be permissioned, only operated by reputable or regulated institutions. According to the announcement, this is to prevent front-running and MEV attacks. There's also a subset of validators that will be run by financial institutions, allowing for seamless integration with TradFi networks. And Ondo Chain will have native DeFi support for RWAs that will incorporate Ondo's bridge. So then, what about the Ondo token? Well, Ondo is used for governance to vote on things like protocol upgrades, treasury allocations, and strategic partnerships. With a bit of luck, changes to crypto regulations will make it possible for Ondo to capture a portion of the yields it generates on the over $650 million of tokenized assets it offers. With Ondo's unique approach to tokenized assets and its focus on regulatory compliance of all asset types, the project is perfectly positioned as one of the most important RWA cryptos out there. As the adoption of tokenized RWAs grows, Ondo could do well, as more and more asset managers flock to its current and future products. And if you're looking for a deeper dive and price predictions for Ondo, then have I got a treat for you, right over here in the top right. Now, our third RWA crypto pick is Mantra. As a fun fact, we actually covered Mantra in the Coin Bureau Club in July of last year. Since then, Mantra's OM coin is up almost 10 times at the time of shooting. And it's not hard to see why. That's because Mantra supports RWAs through a combination of regulatory compliant infrastructure, modular tools, and strategic developments. For those unaware, Mantra is a highly scalable layer 1 crypto specifically designed for RWAs. Mantra puts compliance first by embedding KYC, AML, and transaction monitoring directly into the protocol. And this ensures RWAs on Mantra are fully compliant with global regulations for all asset types, crucial for institutional adoption. Mantra is a Cosmos-based blockchain, meaning it leverages Cosmos's Inter-Blockchain Communication Protocol, or IBC, to enable cross-asset transfers. And to make sure everything is as seamless as possible, Mantra also has a decentralized ID system through the use of soul-bound NFTs, which helps with KYC across multiple platforms. Mantra's modular architecture is what allows its blockchain to support RWAs. For instance, there's a Mantra Token Service, or MTS, which is a powerful toolkit that allows devs to issue and manage tokens with customizable yields, royalties, and permissions. Notably, MTS also includes the ability to freeze and destroy tokens associated with illicit activity. Then there's Mantra Guard Module, a compliance and permissioning system that works in tandem with Mantra's digital IDs. Essentially, the Guard Module's role is to determine which users are able to access and interact with particular assets in order to ensure regulatory and legal compliance. There's even a dedicated compliance module, specifically designed to tackle any regulatory hurdles of on-chain financial transactions. Admittedly, this might sound like overkill to the average person, but to institutional investors, this sort of regulatory compliance is absolutely essential. Anyway, what sets Mantra apart is the primary focus on regions like the Middle East and Asia, where it collaborates with regulators to streamline the licensing of RWA tokenization. The result is that Mantra has been partnering with giants such as property developer DeMac to tokenize over $1 billion in real-world assets on its chain. And this relates to Mantra's coin. Now, can be used for staking, which allows holders to help secure the network while earning a yield. Holders can also gain governance rights and can vote on things like future upgrades or ecosystem grants. And of course, it's also used to pay for transaction fees on the network. As a Layer 1 blockchain purpose-built for RWAs, Mantra's permissioned infrastructure makes it an attractive solution for institutions. As such, could see significant price appreciation as the narrative takes off, although do bear in mind it's seen some pretty impressive gains already. Okay, our fourth RWA pick is MakerDAO, which recently rebranded to Sky. Before rebranding, MakerDAO was a pioneer in integrating RWAs into DeFi, primarily through its DAI stablecoin, which also recently rebranded to USDS. The reason for the rebrand was to illustrate Sky's endgame, which is to decentralize the Maker protocol into independent sub-DAOs, which are now called stars, each with their own governance tokens but utilizing Sky's framework. We should point out that both the original MKR and DAI tokens are still active, and upgrading to the new Sky and USDS tokens is optional. This gets seriously interesting when you learn that a proposal to rebrand back to MakerDAO was rejected by just 4 whales with a 98% majority. A rabbit hole for another time, perhaps. Anywho, by leveraging RWAs, Sky enhances the utility, stability, and scalability of the USDS stablecoin, which acts as a bridge between TradFi and DeFi. To avoid relying on volatile crypto assets as collateral, Sky uses RWAs like US Treasury bonds, mortgage loans, and even renewable energy project financing as collateral in order to mint this USDS. This helps Sky to generate a stable yield, which reportedly accounts for around 48% of its annual revenue. To manage these off-chain assets, Sky uses a specialized RWA foundation and a special purpose vehicle to ensure regulatory compliance and full governance control over off-chain assets. And to ensure this regulatory compliance, Sky's design features safeguards to freeze any USDS involved in illicit activity. Of course, the Sky token can be used for governance, allowing holders to vote on parameters like fees, interest rates, and any future protocol upgrades. And what's more is that it acts as a backstop in the event of debt shortfalls. So if collateral asset value drops below loan values, Sky's token can be minted and sold to cover any losses. And what's great is that to counter that supply being minted, any surplus fees generated from loans are used to buy back and burn Sky tokens. And this is part of a more complex system called the Smart Burn Engine, which is outside the scope of this video. But The result is that Sky is actually deflationary overall, which is bullish for its price. This will be especially true as the RWA narrative sees more adoption, because there would be more protocol fees to fund the smart burn engine. And as you've probably guessed, that adoption will likely come from institutional investors who may want to boost their wealth through tokenized assets like treasury bills. And this would push Sky's price, well, skywards. Now, our fifth RWA crypto pick has to be Ethereum. And that's because Ethereum and its Layer 2 ecosystem absolutely dominates the RWA sector, accounting for around 86% of all on-chain RWAs. Ethereum has been used by major institutions to launch tokenized real-world assets, and these include the likes of BlackRock, UBS, and Franklin Templeton, to name but a few. As you'll know, Ethereum is technically the most secure and developed smart contract crypto, making things like RWA transfers, fractionalized ownership, and automated compliance a walk in the park compared to other blockchains. But what you may not know, though, is that when it comes to RWAs, Ethereum has another trick up its sleeve. And that's because Ethereum has a specific token standard designed for RWA tokenization called ERC-3643. In a nutshell, ERC-3643 enables institutions to tokenize real-world assets whilst meeting KYC and AML requirements. Oh, and fun fact, ERC-3643 has been dubbed the Token for Regulated Exchanges Protocol, or TREX for short. Obviously, not all RWAs will be running around as TREXs. Most RWAs on Ethereum right now likely exist as ERC20 tokens, which, for those unaware, is the most common token standard on Ethereum. If you see a project runs on Ethereum, chances are it's an ERC20. Anyway, while Ethereum's Layer 2s are a bit of a meme right now, they do make transactions much faster and cheaper, which is precisely what's needed for on-chain RWAs to flourish, at least the ones that don't require high security guarantees. Best of all, you won't struggle to find an Ethereum Layer 2 because, there's like a bajillion of them. Alright, sorry, that was a bit of a cheap shot. In all seriousness, though, the fact that most RWAs are on Ethereum explains why spot Ethereum ETFs continued to see significant net inflows despite ETH's recent struggles. Perhaps the upcoming Pectra upgrade could further help improve Ethereum sentiment. We actually have a video all about Pectra, which you can check out right over here. For now, though, all you need to know is that Pectra will improve Ethereum's scalability and efficiency on the base chain, which will allow more RWA activity to take place on the Layer 1. So then, what does all of this mean for the crypto market? In short, tokenized RWAs are extremely bullish for crypto. And that's simply because most asset managers have decided to tokenize their RWAs on public crypto blockchains and use public crypto protocols. This is a trend that's only going to continue as regulations improve. In fact, RWAs could be one narrative that sees more capital inflows than any other crypto narrative out there. And we reckon this is especially true for Ethereum. Now, this might sound a bit odd considering that it isn't purpose-built for RWAs like some others, but hear us out. As we mentioned a moment ago, Ethereum is home to the vast majority of RWA activity already. And that's precisely because it's the most secure smart contract crypto. So while we're sure that RWAs could cause plenty of other cryptos to pump, it's most likely to be ETH that's front and center. This is especially true when you consider the regulatory backdrop for crypto in the US. Say, did you know that President Donald Trump's own DeFi protocol, World Liberty Financial, has been buying up ETH by the bucket load? If ETH does begin to gain momentum, other altcoins should eventually follow. But you won't be making multiple gains on ETH or even larger established altcoins, that's for sure. And this is exactly why we started the Coin Bureau Club. There you'll be able to see what we here at the Coin Bureau hold in our own personal portfolios. You'll also find weekly altcoin reviews for promising projects voted on by you, our members, as well as daily alpha and insights from members of the Coin Bureau research team. So if you want to stay ahead of the game, consider becoming a member of the Coin Bureau Club using the link in the description, and I will see you there. Now, if you liked that video, don't forget to check out our latest one right over here. And if you're not subscribed to the channel yet, you can do that right over here. That's me for now. See you next time.